Jamie Dimon declared last year he planned to get more aggressive in seeking takeovers, and he's certainly made good on that promise with JPMorgan buying another financial startup. This time it's college financial planning platform, Frank. CNBC.com's Hugh Sun has the exclusive details on the story, and he joins us now. Hugh, why this deal?
Hey, it's good to be with you, Kelly. So, the short answer is what they're getting is a software platform that's been pretty effective at serving, young people who are heading to college and need to try to pay for it. So it's got a bunch of tools. The main tool is an automated service that helps students apply for federal aid. And so it's got that. It's also got a platform where they can, apply for discounted college courses, scholarships, negotiate their federal aid that they've gotten from, and other things. So basically, what they've got is, this tool that has grown a pretty good user base. It's got 5 million users, and JPMorgan wants to get in on that. They want to basically have an affinity program, essentially. That as you're thinking about attending college, you've got to chase, if all goes according to plan, you've got to chase bank account. And after that, if you graduate, perhaps you're going to add a credit card, mortgage, and auto. So this is their play to sort of get people hooked into the Chase ecosystem at an early age.
Which may explain why they see so much value, potential lifetime value here for what otherwise would be a smallish size transaction. Same for the one that they did with Zagat's the other day. Should we expect bigger moves, things that would really move the needle?
Yeah. So there are a couple buckets of M&A that I see them doing. They've had 3 or 4 in which they bought M&A. They bought fintech platforms that did specific things, whether it's robo-advising in the UK or tax-efficient portfolios. So that's one bucket. This bucket, as I was saying, is more of an affinity play. So Infatuation, right? It's a media company. They do reviews and Zagat. And basically, this is their play to grow, deepen their ties with diners, because diners use credit cards. So in this case, obviously, it's another affinity play, which is unexpected coming from a bank. What they have been less successful at, Kelly, is the transformational acquisition. You think of Morgan Stanley and their multi-billion-dollar deals for E-Trade or Eaton Vance. And JPMorgan, by the way, bid for Eaton Vance. So it's like they swung for it, but they didn't actually, execute on that. So I think they're still in the hunt. It's likely that they're still in the hunt for these bigger deals. But in the meantime, they've just had a steady clip of these smaller M&A transactions.
Yes. And again, whether that's a big missed opportunity or not probably depends more on their strategic vision for what the company will become in the next few years, as Morgan Stanley's plan has been pretty clear. Hugh, thanks very much. We appreciate it. It's great reporting today, Hugh Sun. You can read more online.